Hello, welcome to Accounting Hub. I'm Professor George Carpin, PhD in accounting, and our topic today is return on investment or ROI and residual income. So when we talk about return on investments and so on, we are talking about evaluation of investment centers. Duties of investment center manager are similar to those of CEO, and so we will compare investments. And two common performance measures, return on investment and residual income. What is return on investment? Measures the amount of income an investment center earned relatively to the size of its assets. Because if we go to financial accounting, we have our assets, and these assets must provide revenues. And these revenue should be greater than our expenses. So it's quite reasonable to compare income and assets. So we will compare operating income and total assets. And higher return on investment is more desirable. It means that we are earning more money, operating income, compared to our size. If we compare a local coffee shop with Starbucks, for instance, of course, Starbucks will have much higher operating income. However, they also have much higher assets. So when we compare both, maybe our local coffee shop uh, could be a higher return on investment than Starbucks because we are comparing income and assets. And here, if we add sales, dividing operating income and multiplying total assets, we will have two more ratios, sales margin and capital turnover. So our return on investment, it is high or low because of sales margin and or capital turnover. Okay, let's go to our Excel file. And if you are a regular here, you already know that. If you are not, I want to let you know that all of our Excel files, they are free, and the link to download it is in our video description. So here we have Scarp Incorporation with two divisions, Division X, Division Z. Operating income, 85.5 for Division X and asset 320. Division Z, operating income 105 and assets 650. And revenue, 240 for Division X, 420 for Division Z. So our return on investment, operating income divided by total assets. So for Division X, 26.7%, for Division Z, 16.2%. Wow! Division X much more profitable than Division Z. Let's investigate why. It is because of sales margin or because of capital turnover or both. So let's go here. Sales margin, operating income divided by sales revenue. 35.6%. Division Z, 25. Wow. Division X provides a higher sales margin than Division Z. Let's go to capital turnover. Sales divided by assets. 0.75 for Division X, 0.65 for Division Z. So this return on investment here, Division X is much better on sales margin and capital turnover. So much better than Division Z. And what is residual income? Residual income determines whether the division has created any excess income above and beyond management expectation. Residual income, operating income less minimal acceptable income. And how do we find the minimum acceptable income? Target rate of return times total assets. So let's come here. Assume 20% our target rate of return. So our minimum acceptable income for division X, total X, total assets times 20%. Division Z is the same. So if we compare operating income with the minimum acceptable income, we will have for division X, operating income 85.5 less 64, positive 21. Division Z, 105 less 130, negative 25. Here, residual income is not so common as return on investment because we will have the same conclusion here. So division X is the best, sorry. And here division X is also the best. Another way to find it, if our return on investment is greater than our target rate of return, we will find a positive division, uh, a positive residual income. If it is lower, just like division Z, we will find a negative residual income. Another way to analyze investments or divisions, it is about uh, our master budget here that we call flexible budget. But this is a topic for another video that is all also in our channel. So just look at in our playlist, you will find it. Okay? So guys, thank you so much. Subscribe our channel. You will be the first one to know when a new video arrives. Like our video, like our Facebook page, Accounting Hub by Dr. Scarping. And if you have questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.